What we're going to be looking for are specific reaction levels. That's it. Okay. We're going to be looking for where price moved away from aggressively, spent very little time there, okay, and then returned back to it in the form of an order block. Okay. So now we saw price aggressively move higher off the low. Okay. And we have a very clear order block right here. Okay, and price comes down into it rather handsomely, and then once we form a solid swing low in here with a confirming candlestick, not that I have a whole lot of faith in candlestick patterns themselves, but we have a nice hammer in here, and you see price has a really respectable rally. Now we're going to assume that any long taken right at the order block, we're going to assume that 85.42 on the weekly chart. Again, this is the Euro USD fiber. Okay, buying there. The potential in terms of range was 797, so approximately 800 pips. So that's certainly respectable in any standard. I mean, if you're not impressed with 800 pips, I got nothing for you. So we have, obviously, we see that the advantages of seeing weekly order block illustrated here. Price, when it rallied out of here, it created another order block. Okay, and again, I do not like the long wicked candles here. Okay, even though this is a hammer, I would much rather have my order block associated with this. Okay, because this candle has more body, even though it does has wicks on it. Okay, it has more body to delineate it from this type of event here, where we have a very clear wick or hammer or a doji, if you will. Price comes down, trades right into that order block, and rallies off rather handsomely again. Now, again, we utilize market structure back here to frame this setup. Okay, so it's right out of the Sniper series. So it shouldn't be nothing new to you there. As price begins to trade higher, obviously, we have new order blocks forming where price came down, spend very little time here, rallies off aggressively, and then drops back down into the order block right here. Okay, and again, we're just going to use the old high. Okay, I really want to be conservative in terms of showing you what to anticipate or expect. But certainly, it's not limited to this. Okay, so again, if we were buying down here inside this order block, just getting back to the old highs back here, that's 1,000. Almost 1,100 pips. You heard me right. Almost 1,100 pips. Okay. Some of the biggest moves that you see in my older videos, where I was calling summer lows and spring highs and such. This is exactly what I was doing to frame all that. Okay. But you all saw simply me taking a Fibonacci tool and saying, okay, here we're going to take this low here, and we're going to put it on this high. And you see when it comes down to the 79% retracement level, I have an ICT optimal trade entry, and that's what I was buying. The part that I was leaving out was it was framed upon an order block.
So now that you've got some clue of how to spot order blocks in the market, it is time for us now to use the 1 hour time frame and the 5-minute time frame to get a precise entry so as to we can increase our chances of becoming profitable in the forex market. Okay, on the 1 hour time frame, you first identify your order blocks. Okay, take a look at this rally to the downside. The last bearish candle prior to this move is our bullish order block. You see that candle is our bullish order block. So if we try to highlight this candle and extend it all the way to the right hand side, yeah, that's our order block, bullish order block. Next, you want to highlight both the low and the high of that order block. This is the low and that's the high of that order block. What are we going to do next? In order to get our precise entry with a minimum risk exposure to the market, we dive into the 5-minute time frame. So on the 5-minute time frame, as you can see, when the order block was created, price moved off from the low of that order block and come back into it. Okay, so how could you have benefit from trading or getting a precise entry from this setup? First, you have to consider what? The time zone. As you can see, we have two time zones. The first time zone is a London session and the one indicated in the red is what? The New York section. We don't want to trade in any random session, okay? We are specifically focusing on taking trade during the New York section. So during the New York section, as you can see, when price traded into our order block, there is no entry. There is no entry. Why? Simply because price traded below. If we want to take a buy position, we don't want to see price closing below the high of that order block. Neither we don't want to see a price closing below the low of that order block. Then we can anticipate to take a buy position. So as you can see here, during the London session, price was trading throughout inside the order block. We wait patiently for the New York section. During the New York section, price was trading. And we said we don't want to take a buy position when price is trading below the high of the order block. Instead, we want to see price closing above. As you can see here, price close above the high of the order block. Immediately price close above, you wait for the retest. On the retest, that's where you want to take a trade position. Right there, you take a trade position on the retest. Right there, and your stop loss slightly below the order block. And what happened? You see how the market then move with high velocity to the upside. We'll go back to the 1 hour time frame. We look for another trading opportunity. Take a look at this move to the downside. The last bearish candle prior to the move to the upside is our order block. So let's identify it. This is the order block. So that's our order block. Next, you want to label both the low and the high of that order block. And then you zoom into the 5-minute time frame to get a precise entry. So on the 5-minute time frame, as you can see, the order block was created at this level, price traded off. Upon coming back to it, you want to see if the time correlates with the New York section, then no hesitate. You can take that trade. As you can see right here, during the New York section in the red. Remember, we are only focusing on the New York section, taking trade with respect to the New York section time zone. So as price move away from our order block, upon coming back to trade into it, you notice during the London session, price came, traded into it, moved back. You see, it closed above the high of our order block. Upon coming back to retest, you see, during the New York section, right there is our entry point. We'll execute that trade right there, and our stop loss slightly below the low which was created during the London session. We'll execute that trade right there, and our stop loss slightly below the low which was created during the London session. Now let's look for another opportunity. Take a look at this level. You see this move to the downside, the last bearish candle to the downside parallel to the move to the upside is our order block. So we have our order block right there. Next, we identify both the highs and the low of that order block. Secondly, we zoom into the 5-minute time frame to get our precise entry point. So on the 5-minute time frame, price move away. Upon coming back to trade into the order block, we can only take a trade position with respect to our time zone, which is the New York section, annotated in red. So as price came during the London session, we take no trade. We wait patiently for the New York section. You see, the New York section price came again, traded into the order block, close above and continue moving. It came again to retest and continue moving all the way to the upside, as you can see. So in order for you to get a precise and accurate entry, always make sure you trade with respect to the New York section. Okay, here is another trading opportunity. Take a look. As price was trading lower low, lower high, lower low, lower high. So you see clearly here price was in a downtrend. Okay. If you noticed, you see this move to the upside. The last bullish candle prior to the move to the downside is our order block. This candle is our order block. That's one. Next also, you see this move to the upside. The last bullish up close candle prior to this aggressive move to the downside is also another order block. We highlight it, this one. Now we highlight both the highs and lows of the order block. This is the high. The second one as well. This is the low of that order block at that level. And we also have the high of that order block at that level. So we go into the 5-minute time frame. We zoom into the 5-minute time frame. And as you can see in the 5-minute time frame, in order for us to take a trade position as price approaches our order block, we have to make sure that the time of execution aligns with the New York section. Okay, so if I use my indicator tab here to see, here, right there, you see, when price came into that order block and it was doing the New York section, right there, would have taken that trade position. And you see how price dropped. That was yesterday after the NFP release. You see how price then dropped. So that's how you can trade the ICT order blocks with respect to the New York section time zone. Make sure you watch this video over and over, backtest, study, and over time, there's high chance of you becoming a profitable trader. And don't forget to like and subscribe for more content like this, and have a wonderful trading week.